that you're sending through to the show on this issue today. For now, we're going to turn our attention to the investment conference that was held in the country yesterday, led by President Cyril Ramaphosa and his investment envoys. And they've assured local and foreign potential investors that the Ramaphosa administration is serious about fighting crime and corruption in order for investment to be able to take off. Ndebo Mokobo has more. All right. So unfortunately, it looks like we don't have that story yet. So what I'm going to do is that I'll take you straight to the guests that are joining us for this conversation. Jason Hamilton is a guest lecturer at Stellenbosch Business School. Debo Khas, or rather, Jason, good morning to you.
Good morning.
Hi.
Thank you for having me.
Debo Khas is an entrepreneur and president of the SMME Forum. Debo, good morning.
Good morning, Casey.
Dr.
Good morning, Jason.
No problem. Dr. Badile Hotla is a social commentator and former statistician general. Dr. Lehotla, good morning.
Good morning, Casey. How are you?
I'm all right, thank you.
And your listeners, fine, thanks.
Let me thank all of you for making time to be part of this conversation and really add your own contributions to it. I think perhaps if we can start with, the silver linings, because I know that there will be a lot of critique that's going to come as part of the conversation. And from the conversations that I was having with some of the officials yesterday, whether from business or even from government, one certainly gets a sense that the critique that is offered towards even platforms like the investment conference can be seen as being anti the spirit of hope in the country or the spirit of wanting South Africa to do well. And Jason, let me begin with you. I mean, are there ways in which we can critique what is happening and a platform like the investment conference and ask really critical questions without being seen to be basically anti-development in the country?
I think it's a complex situation, which I think is what we are seeing playing out in the various narratives being spoken about. And I think as context is kind of needed, yes, South Africa has seen a relatively strong bounce back, but this is mainly supported by the basic sector, by the retraction we saw in 2020. So then our recovery is actually very fragile and precarious. And this is exactly what the market's commentating on. And if we look at the growth projections of kind of between 1% and 2% of all parties within the market, seeing for South Africa over the medium term, we see why this narrative's coming forward, because our peers is kind of growing or projected to grow at about 4%. So I think it's fair to understand where that camp's coming from. And there are various negative factors, which is very real, which we need to focus on around the SOEs, around global growth slowing, inflationary pressure, supply chain shortages, etc. But on the other side, there are positives, and I think these need to be focused on. So I think that the positives we need to focus on, and what I think is important for business and government to look at is the fact that global stimulus is filtering through the market, and we're seeing this in unfortunately in kind of spent up consumer spending. But this is filtering through and will filter through the market as confidence starts building. I think the commodity prices and the related demand being elevated and remaining elevated, at least over the medium term, and I think now going to continue because of the geopolitical risk we're seeing, is a benefit, or at least can counter a lot of the negatives we are seeing. And we're already seeing the positive of this coming through with SARS reporting increased collections, and ultimately then we're seeing this coming through in companies reporting higher earnings. I think from a reform point of view, we are seeing enactment taking place. Yes, of course, we always want to see things happening quicker and sooner, but we are seeing much more clearer plans being laid on the table and action coming through. And if we just refer back to the budget, we're seeing our deficit being down lower than what we projected before. We're projecting it to reduce further. Debt is going to peak at a lower level and probably going to continue to reduce based on this short-term effect of the commodity price cycle. welcome things government is doing is, for example, the reduction in the company tax rate from next year. Yes, it's only 1%, but this will ensure more money in the hands of companies, which they can apply to reduce debt, so to be more sustainable. But they can also apply then additional cash flow, in research and development and innovation, which we all know has the long-term benefit of supporting growth and ultimately job creation. And even if that benefit is transferred directly to shareholders, so investors, it means more money available in the hands of an individual to spend, or then for a pension fund to invest more. So I think there are definitely positives coming through. I think also one major thing, which is also, again, we saw it yesterday, is this narrative around government's commitment to reduce the barriers of doing business and increasing the ease of doing business. It's all positive signals to the market. So I think all of these things considered, we probably won't see any further downgrades, which is definitely positive and playing into the confidence level seen.
All right. We're going to continue the conversation. You just heard from Jason Hamilton there. Dr. Badi Lehota will weigh in after this quick break.
South African National Parks invites you to a virtual tourism investment